Control accounts in cost accounting. The most important control accounts that are kept by the cost department are wages control account, stores ledger control account, general ledger adjustment account, work in progress control account, finished goods ledger control account, overhead control account, sales account, cost of sales account, and costing profit and loss account. So we'll just see briefly what each of them means and in what context are these control accounts kept. So first we'll take a look at wages control account. All wages related transactions are dealt well in this account. It is normally debited with wages and credited with labor cost absorbed. Indirect wages are transferred to respective overhead accounts and direct wages are transferred to work in progress account. So this type of control account is for tracking the wages and it is normally debited with wages. So there is an account called wages that is debited and there is an account called labor cost absorbed that is credited. So that is the difference. Indirect wages are transferred to respective overhead accounts. So we will, in a while, we will see what is overhead and what it means by that. Typically, overhead means it's an expenditure over and above prime cost. And overhead also means it is indirect material costs or indirect labor or indirect expenses which are incurred. So here in wages control account, indirect wages are transferred to respective overhead accounts and direct wages are transferred to work in progress account. So that is this wages control account. The next control account which we actually see is stores ledger control account. Here all material transactions are dealt by this account. It records summary of receipts, balance of stock in hand and raw material issues. All these things are kept track by stores ledger control account. Then we have general ledger adjustment account. This account is normally maintained by cost ledger self-balancing. This account is also called as cost ledger control account. It contains only impersonal accounts. Impersonal means only real and nominal account. All financial transactions are credited to cost ledger control account by contra debit to various control accounts on account of wages, salaries, material purchases, etc. Similarly, all financial receipts are debited to this account. The main objective of this account is to complete double entry in cost accounting. The balances in the account reflects the total balance of all personal account in the financial ledger. In other words, the balances in this account should match with total balance in personal account in the financial ledger. So whatever is there in real and nominal should be balanced with whatever is in the personal account which is kept in the financial ledger, because personal accounts are not kept in cost accounting. The next one is work in progress control account. It represents the total work in progress at any given point in time. This account is debited with the total of wages, materials and overheads as it stands transferred from the respective control accounts. A credit is given to the account whenever a job is completed and hence this account shows the total value of all the incomplete jobs. Now that is work in progress control account. The next one is finished goods ledger control account. This account represents the total value of all finished goods in stock. Remember, in a manufacturing process, we have raw materials which will be worked upon in a center called factory, which would create finished goods. So finished goods are a product of the factory. So this account represents the total value of all finished goods in stock. It is usually debited with opening balance of finished goods and the cost of finished goods as it stands transferred from work in progress control account. The balance in this account shows or represents cost of finished goods in stock that are unsold, and this account is credited with cost of sales. So that completes the finished goods ledger control account. Next one is the overhead control account. So overhead, you actually now know what it is. We'll be dealing with it later in a lecture. In lecture 5, we will be dealing with it in detail. But here, overhead control account, this account deals with overheads. It is debited with indirect wages, indirect materials and indirect expenses and other overheads, and is credited with amount of overheads recovered. Usually in this account, the balance represents under or over absorption of overheads and is transferred to costing profit and loss account. The next one is cost of sales account. This account is closed by transfer of sales account and is usually debited with cost of goods sold and credited with selling and distribution overhead recovered. And the last one is costing profit and loss account. This account represents profit or loss transferred from sales account and represents the transfer of under or over recovery of overhead. The final balance of this account represents net profit or net loss and is reconciled as per financial profit and loss account with the profit and loss incurred in transactions. So this completes control accounts in cost accounting.